Hello, my dear student. We'll be discussing now the another chapter, that is of investigation and due diligence. And you will find that whatever job we were doing up to this time about the auditors is not the job which we will be discussing now. It's not the job of auditors as usual. But we are being assigned as a chartered accountant sometimes the job of, and we get a job of investigations or due diligence. Now, the first, what is investigations? In the beginning, when we started this auditing, I told you that the auditor's job is to express, the overall objective of the audit is to express an opinion. The auditor's objective was never investigations. Auditor is called a watchdog, not a bloodhound. Now we were doing the job of watchdog. We are not a bloodhound. But when we talk about the investigations, we are a bloodhound. And that is the difference between the auditing job and the investigation job. The watchdog only barks. He is a barking dog. The auditor is a barking dog. He only barks because he is a watchdog. He never follow up anybody. He never go beyond that barking. And the overall objective, as I told you, that is expression of opinion, not the passing of an order, drawing any conclusions. No, it's an opinion based on sufficient appropriate audit evidence. Auditor's job is persuasive rather than conclusive. He persuades himself whether these financial statements are not materially misstated. They show the true and fair view. Whatever the audit evidences he gets during the process of audit to form that opinion may not be acceptable in the court of law as evidence. But the chapter which we are going to discuss today is of an investigation. And this investigation is a matter of finding the actual fact. It is not a matter of opinion. It is not a matter that where we say that we collect a persuasive evidences. In investigations, we have to be very sure. This is a conclusive evidences we have to collect. We did in case of the standard relating to frauds and errors, we talked there also. To detect a fraud, to prevent a fraud is the responsibility of the management. Auditor responsibility is not detect the fraud. Auditor responsibility is not also to investigate the fraud. But now the job which we are doing now as an investigator, when we are talking about the investigations, we are doing the investigations, not the audit. And therefore, our job becomes entirely different than as an auditor. We have to find a fact. We have to investigate the fraud. So, the job is entirely different than the auditors. Now, what is investigations? You must be very clear in your mind about the concept now that it's not an auditing. It's an investigations. You have to find the fact. You have to go to that extent that you can find the fact. You give your conclusive report of fact. not the expression of opinion. An investigation is a systematic and in-depth examination to establish a fact or to evaluate the specific situation. You have to establish a fact here. There is no question of expression or opinion. It's the establishment of fact. The evidence which you collect during the process of investigations will be acceptable in the court of law. That should be such type of evidences which are acceptable in the court of law. They are not persuasive in nature. They are fact. They are evidence which should be acceptable because they will be used against certain party, and on those, based on those, that party will be penalized. So the fact can't be, the evidence can't be a persuasive evidence. And now the investigation which I just read in that, here it is a systematic and in-depth examinations to establish a fact or to evaluate a specific situations. The investigation is of a particular situations to find a fact about a particular point. Take a case. One of the employees had manipulated the cash, and there was while doing the physical verifications, the cash worth rupees 50,000 was found less. As far as the auditor is concerned, he will see that what will be the impact of 50,000 on the financial statement. Whether by this there will be a material misstatement in the financial statement or not, and if it is not, then he may go ahead. But if you are given a job to find out who did these manipulations, who embezzled the cash of rupees 50,000, the investigators has to examine that situations. It has to establish a fact that this is the person who has embezzled the cash. And certainly, the evidence which you will be collecting during that process will not be a persuasive evidence. They will be a evidence which will be acceptable in any court of law to prove that person a guilty. We are not bothered about the presentation in the financial statement. The investigator is not bothered about it. How it was presented. It was material, not material. He is bothered, his scope of work is that to find out who embezzled this cash and how it was done, to produce a fact so that the company can take a necessary disciplinary action against that employee. This is not the job of the auditors. The job of auditors is only to that extent, once it is disclosed and he comes to know that there is an embezzlement of cash, there is a shortage of cash on the particular date, he has to know, he has to assess what will be the impact on the financial statement of such type of fraud. And if he feels, and he after his assessment, that the impact on the financial statement will not be material, he may not consider it for the purpose of expression of true and fairness about the financial statement. He may report it as a matter of internal control in the letter addressed to the management under SA 265, or he can be addressing his letter under SA 260. But he will not investigate the matter, how it was embezzled, who took this cash, who is responsible for it, that's not the scope of the auditors. He may suggest in his letter to make a further investigation of these matters, but his job is not to investigate the matter. Here, if you are appointed as an investigator to establish the fact about the embezzlement and shortage of the cash, then certainly investigators has to investigate, establish a fact under the situation, who is the person who have embezzled it, how he has done it, what types of evidences, how could you say that yes, he has done it, whether he can be held guilty for this deed, for this embezzlement of cash, shortage of cash. So, systematic and in-depth examination has to be done. It is an inquiry into facts. Investigation is an inquiry into facts. It is a fact-finding body. It is not an interpretation about something. It is a fact-finding body. And what is the undertaken, what is the process followed by the investigator? What it is it undertaken to enable a financing, investment decisions? Sometimes the investigation is done not only for the purpose because there was a fraud. Somebody orders investigations because he wants to take a certain financing decisions. Bank wants to finance the certain companies and he wants to get investigated a certain production process. He wants to get investigated is the company is actually earning the cash profit. That may be the also investigation, is specific one to find a fact about it. Senior management, government get an indication, primary evidence of fraud. If there is a fraud, then the investigator can be appointed for that purpose, as I explained to you. Fraud, profitability, cost determinations. You may be appointed for detecting a fraud, to investigate it, to investigate the profitability, because the financer, the banks who want to finance this company has a doubt over the profitability presented in the financial statements. They want to get it investigated, want to bring the fact to the record so that he can take a financing decisions. The bank can take a financing decision whether the profitability shown in the financial statements are okay. Maybe that there may be a fraud regarding the cost determinations. The costs are not determined correctly and therefore ultimately the profit, it has an impact on the profits. So, there may be investigations from that side also. So, investigation may be of the particular point, it may be a investigator may be appointed for detecting the fraud. Investigator may be appointed by the senior management to detect certain fraud, misappropriation, embezzlement. Investigator may be appointed by the financial institution to investigate about the company, its profitability, its cost determinations, its litigation cases, its environmental issues. So, that may be the subject and the scope of the investigators, but it is a particular area. Now, these are some of the points which we will be discussing, that what is the difference between the audit and investigations. Dear students, as I explained in the beginning, that the basic difference between the auditors and investigator is the auditor is a barking dog, he is a watchdog, the investigator is a bloodhound. Now, what is the investigation? Limited to a particular scenario. Investigation is done for the particular fraud, to establish a profitability, whether the profitability are misstated, cost determinations, of the companies, the financing institution has a doubt over it. So, these may be some of the areas of the investigations, that is a particular area scenario to establish a certain fact. Audit is not that. What is audit? Audit largely involves around the financial statement, their presentation, their classifications as per the generally accepted accounting principles, as per the regulatory requirement. And there is an expression of opinion on the true and fairness of the financial statements and working results. But it is an opinion, and the auditor is expressing these opinion based on the persuasive evidence it has got, sufficient appropriate audit evidences. There is no question of sufficient appropriate here in case of investigation. You have to establish a fact. You should have evidence which are conclusive, not persuasive. In case of investigation, coverage can be a situation specific, may be governed by the statute. Because of fraud as committed, there is a section, there was in 1956 Act 233 section was there. But in the case of audit, it's external or internal audit are generally undertaken pursuant to the requirement of a specific statute. You conduct a company's audit because it is written in the Companies Act. The scope is written there, format of report is written there, everything is specified. That is not the case with the investigators. In what will be the investigation report, how it has to be presented, there is no such type of standards for it, and there are no such type of laws to investigate it, because law can't be made to investigate the fraud, because they are a specific situation, fast changing, every fraud is different from another fraud. Whereas the audit is not such, we have standardized it. Investigation can be at timeless, frequent than audit. Actual work may be exceed period of financial year. You may be investigating the 4 years, because if there was a fraud, you may investigate for 3 years account, 4 years account, 5 years account. But in case of audit, it is for the particular specific 1 year. Frequency is determined in case of audit, determined by the statute or management. The frequency of auditing generally it is 1 year. Investigation request going beyond obvious evidence, a detailed study. You have to give evidence which are obvious, which are beyond doubt. It is an establishment of fact, not of opinion. It requires a detailed study of that situation, that scenario. Audit does not. Or mainly involves a sampling based on the judgment. Judgment of whom? Auditors. It is basically on sampling, no detailed analysis. It is more of persuasive nature rather than a conclusive nature. That is more important here. The evidence collected by the auditors are sufficient and appropriate. And what is a sufficient and appropriate? Sufficient and appropriacy is judged by the auditors. But in case of an investigation, sufficiency and appropriateness of the evidence is not judged by the investigator. It should be conclusive. It should be conclusive. In case of an investigation, it may relate to information not received, not given to the particular information, otherwise no apparent limitation is assumed. Audit involves an inherent limitation of sampling, reliance on the management. It is a limitation of auditing because you cannot check each and every transactions. That we discuss, when we discuss the auditing, it has an inherent limitations that it has to resort to the sampling. It can't check the 100% transactions, otherwise it will take years to do the auditings. But that's not the limitations to the investigations. Investigation has to do the 100% investigation of all the transactions. There is no limitation on him that you can't do the 100. There is no limitation of time on him. Just like in the auditing, that for the listed companies you have to give a statutory audit report before 31st of May of that year in which the accounts were closed. For 31st March 2014 report, you have to give on 31st May 2014. There is a limit of time, billions of transactions. Auditor has to resort to sampling. But in case of investigation, some fraud took place in the company, just like you find in case of a Satyam, when there was a overstatement of revenue, overstatement of the fixed deposits, the things were investigated. There is no limitation of time. The objective has to be achieved, whatever time you take. How many years you investigate, that's not the limitations anywhere. In investigation, there is a conclusive evidence, as I told you. But in case of audit, they are prima facie evidence or persuasive evidence, not a conclusive. Here the auditor satisfies himself that whether these evidences are sufficient and appropriate or not. But in case of an investigation, the evidence which he collects is not for satisfaction of the investigators. It's a satisfaction for the counterparty. It has to be satisfied, the court has to be satisfied, the disciplinary committee has to be satisfied with those evidence that another party is guilty of conducting that crime or fraud. So it has to be conclusive. What about the investigation? The skills is a skillful activity where what should happen is not generally available through standards. There are no standards for conducting an investigation, but we have standards for conducting an audit, because it's a repetitive situations and you can define the situations what you do in every company. But the fraud, the investigations, or it may not be a case of a fraud, the financiers, the banks wants to get investigated, the company to whom it wants to finance. So the scope is different in a different situations, no standard for it. Investigation is overcome is reported to a person who has initiated the engagement, to whom the investigator reports. If it is appointed by the management, okay, report to the management. Appointed by the government, report to the government. So whosoever appoints him, he will report to them. But as far as the auditor is concerned, statutory auditor report to the shareholders, is specified under the Act. So no variability is a standard that the statutory auditor has to report to the shareholders. So dear student, that was the difference between the audit and investigations. There are now in the New Companies Act 2013, there are sections which has given a more strength to this such type of investigation. If any fraud takes place in the company, then it has to be, there are a section about the investigations there. They are more stringent now. The penalty has been increased. Now, this chapter covers the investigation and due diligence. Now the question is that what is this due diligence is? Maybe that difference may be somewhat, as we were discussing in case of a management, internal audit, operational audit, the due diligence and the investigation may have a step difference. Due diligence, lesser level, less investigation. In case of an investigation of particular matters, there may be more investigations. more deep investigations. So we have to understand what is the background, why we conduct our due diligence, and what is the concept of due diligence, what types of work the due diligent persons do. Due diligence is a term that is often heard in the corporate world these days in relation to corporate restructuring. It includes internal reconstruction, amalgamation, spin-off, divestment, mergers, joint ventures, split-off. Take for example, there is a one investor who wants to acquire a company in India, and the company is of a software company. The investor is from USA and he does not know much about this company. He wants to acquire this company because he feels that this type of industries or companies has got a great future in India. Now, he does not know about this company much. There may be a dispute with somebody. This company may be facing the investigations from the income tax department, from the service tax department, from the environmental agencies. It may have a lot of litigations with the parties, lot of litigation with the employees. And once he purchased that company, then he will find himself that there are a lot of litigations here, and they are so serious that the company can't be run. So before acquiring this company, that fellow, the investors wants a due diligence done from any expert persons. Due diligence, he wants to know what is the state of finance in this company. He wants to know what is the state of legal cases in this company. He wants to know what is the income tax assessment of these companies, whether there are any disputes with the income tax department, with any tax authority, the service department, or any other regulatory authority, or it has a dispute with the employees, it has a dispute with the vendors. So he wants to know that everything is fine here. Or he wants to invest in a company. Take a case of a telecom companies. Some telecom companies from outside India invested in India, and later on their licenses were cancelled because the due diligence was not correctly carried out. There was a risk in investing in such type of companies because there was they took a license by misstating the fact. So any investors who wants to purchase will conduct a due diligence of that company. Before purchasing this company, he wants to know everything ins and outs of those companies. And that may be in case of reconstruction, it may be acquisitions, or maybe even a spin-off, or if it is a financiers, even the financer can be, if it wants to give a loan to that company, it may conduct its due diligence. What is the purpose of the due diligence? I have just explained to you, but the purpose are to assist the purchaser or the investor in his decision making through use of professional skills before the transaction is complete. Before he actually purchased that company, he wants to conduct through an expert person to tell him and to know from him whether everything is fine in this company. There is no dispute, there is no litigations. Whatever is stated in the financial statements are true. There are no frauds in the companies. There are no misstatements in the financial statements. The these production activities are going well. There are plant and machinery are in a good shape to do the business, or the plant and machinery have become outdated and it is going to be outdated. The company is in litigation with the government about the environmental issues. Who will tell to that investor, sir, these are the problems in this company? What he does, before he acquires, he appoints one person and he may call him, please do the due diligence of this company for me because I want to acquire this company. What is the amount of purchase consideration? That will be settled later on. First, he wants to know whether this is okay, this company, there is no problem with this company. And that's the purpose. Sometimes due diligence may be carried out post the transaction, due diligence to identify post-acquisition synergies. He says sometimes due diligence is carried out after acquisition. Maybe that he has acquired a company in India. Before acquiring, he conducted a due diligence for acquisition. Now he wants to combine the activities of this company which he has acquired in India, and he has got a same type of complementary company in USA, whether the synergy between these two companies can be established. He may appoint another due diligence that whether I can keep the synergy of these two companies and get a more profit, do more wealth maximization for the shareholders. So that due diligence from the certain technical person, he will appoint and say that please let me know whether I can do this, I can combine these two companies synergy. That may be the due diligence after the acquisition also. And these are the types of due diligence. Due diligence has not to be conducted only in case of the financial fit. So due diligence may be that in financial accounting, the company has presented, they have a past 3 years balance sheet has been given to you. You want to know whether these financial statements, whatever is written there, is correct. This is not false. There is no misstatement here. The accounting policies the company is following to prepare these financial statements are not challenging. Sometimes the company follows the accounting policy in such a way which are very debatable, but they follow them because that maximizes the profit. The profit is increased by following such type of adventurous accounting policies. They are all debatables. The profit computed by in the profit and loss account may be okay as per those accounting policies, but if those accounting policies are faithfully done as per the accounting standards of that country, for that purpose, you may get a financial and accounting due diligence from maybe that. At that time, the chartered accountant may be competent enough, he may be expert in this finance and accounting portion of that due diligence, and he may be appointed for that purpose. But as I told you, that due diligence is not only of the finance and accounting, it may be of a tax matters. A lot of litigations is going with the income tax department. Whether how much will be the liability on this company in the future? Who will tell to him? What is his risk in purchasing such companies? Whether he at all that liability will be in terms of money, or that liability will be in terms of some of the prosecutions. Some expert in taxations, tax laws will tell him, and he may appoint another due diligent, another person who will conduct a due diligence about the tax matters. There is an operational level. Operations means how the companies, it has got a production plant, whether that plant is following, it has a modern machinery, its operation, its production process is such that it will become it can have a competition in the market, can face the competition in the market. There is, by that process you have a good cost competitiveness with this production process. So you can compete in the market and ultimately can earn more profits. So operational due diligence may be conducted by somebody who is expert in that field. Maybe he may be a technical person like engineers. There will be information technology due diligence. The software it is running, it may have a ERP there. For every operations that it is relying, the company is relying on the information technology. Everything is computerized. For everything there is a software on which the operations are being run. Whether that information technology is okay, there are due checks and balances in that software, or they are prone to so many frauds. This information technology due diligence has to be conducted by maybe any expert who is expert in the software technology. There are another type of due diligence of the human capital. What types of employees they are having? Are they expert in their field? They have a required knowledge in performing their job, or they are, because of that the efficiency in the total efficiency, their efficiency is affecting the total performance of the company. Maybe that when this company will be purchased by that purchasers, prospective purchasers, whether the employees who are the expert in this field, they will remain in this company or they may leave because there is a change in management. What is their average age? Most of the employees are retiring in the next 2 years, top level, or are due for retirement. That may be the risk, whether it will be able to cope up within 2 years, all the mechanism and understand the business of the company and can develop a new skills who will replace this top management. He can appoint a one person who will do this due diligence in the human capital, human resource. The prospective purchaser may appoint a person who is an expert in the environment, and he will do the environmental due diligence for the prospective purchasers. Is there existing litigations or environmental litigations with the government, or there may be a certain issue which can arise in the future, the environmental issue can arise in the futures. He may appoint an environmental expert who will tell him that these may be the environmental issues. He will consider them, whether he should purchase that company or not to purchase, because they have a serious repercussion on the carrying on the company, going concern of the company. Should it purchase or not to purchase this company? There may he can appoint one advocate who will see all the legal matters other than the tax are going on within the company. They have a litigation with the employee, they have a litigation with the vendors, they have a litigation with the government authorities for some other purposes. And what will be the impact of those litigations on the companies in the future? He can appoint a legal expert for that purpose. So he can appoint a due diligence, one person, 2, 3, 4, 5 of a different field to give him a report whether, and then he will consider whether he should purchase this company. And once he say that yes, he is going to purchase this company, then he may go negotiation for the purchase consideration, at what price you should purchase. Do you understand? In case of, if you have seen in the past or 2-3 years back, the scam in the telecom sectors. The telecom company from the outside of India has invested heavily in Indian telecom sectors. When they invested in the telecom sectors, in a particular companies, they appointed a due diligence. They get due diligence from a very big accounting firm or big four consulting firm. And when the Supreme Court cancelled their licenses, one of that investors, the purchasers, the outsider investors who invested in telecom sector in a particular company here in India filed a case against those accounting firm that you didn't get a due diligence correctly. You didn't tell us that this is the risk in the future, that the license may be get cancelled. This risk you never pointed out in your due diligence report to us. If this risk would have been there and you must have pointed out this risk, we would have not invested in India in the telecom sectors in this particular company. So, the due diligence has to be, they carry it later on, they rely on it, and the due diligence has a responsibility also, because it's as a professionals of any field, he has to act in a way which is expected from such professionals, from such experts in that field. So, these are the different type of due diligence, and generally it is required at the time of acquisitions. Now, what do we do in case of a commercial and operational due diligence? These are I have already explained this one, but just to remind you and to rework on it. Daily and routine procedures are there, business operation, analysis of key employees, contracts, all these done. That whether this commercial, the company business is dependent on the contracts they are getting from two parties. And suppose tomorrow in the future those two parties deny the contract to the company, what will happen to the company's futures? Whether it is commercially viable, can run its company, because it has got only two person from where it is getting a contract, it is generating its revenue, and if those two parties tomorrow denies to give a contract and there is a dispute with those parties, it hasn't got a much base, then what will be the impact? So, that may be the subject of commercial due diligence. Involves gathering information on new product, market, competition, how many competitors such type this company has got, what is its market share, what types of organization people they have got, employees it has got, and the financial due diligence. As I told you that generally we chartered accountants who conduct this financial due diligence for the client. Defined as an investigation into affairs of entity, they are investigating entity prior to its acquisition, flotation, restructuring or other similar transaction. Objective is to ensure that prospective investors makes an informed investment decisions. Informed means he must know what is the risk involved in it. It is not that when the purchaser is acquiring, everything will be fine in the companies. There will be a certain disputes. There may be certain drawbacks, there may be certain risk, but that risk must be perceived in advance, and according to that he will take his investment decisions. It is not just checking the facts, reciting them. It is not a checking of the facts. The due diligence person will give its opinion that what will be its future impact. It is about evaluation, interpretation and communication. It will first find out the fact, evaluate the fact, what will be their future impact on the business, and then communicate to the investors. The tax due diligence, ensuring that organization is a compliance with the tax laws, it is complying with all tax laws, and therefore there are less chances that tomorrow there may be penalties or interest imposed on that organization. identifying and qualifying contingent liability. If there is any dispute and litigations with the tax department, what will be the contingent liability? Or there may not be any dispute, but the company is following such type of challenging alternatives for saving the taxes that any time the tax department can impose the penalties, can recover the taxes for such type of alternative and the opinions taken by the company, to stand taken by the, maybe that they have taken some debatable issues, they have taken certain positions, and that position may not be acceptable by the tax authority. Till date they have not come to know about this position. Tomorrow if they come to know, what will be the impact on the company, what will be its liability? Information system DD, about the technology. Information technology involves a scrutiny of IT system and processes in use and ascertaining better ways of deriving values from IT assets. Since most controls today are automated, information system DD gives a fair idea about the control environment, the IT controls. Legal DD. What is this legal DD? Is scrutiny of all specific parts or legal affairs of the target company with a view of uncovering any legal risk and provide an insight into company legal matters. The legal due diligence person will give its report to the prospective investors, the person who wants to invest, that these are the legal complications. It is fighting a battle with the government on this issue. The number of employees have filed a case against it because there is a retrenchment of employees, and what will be can be the liability of the fate of these issues. That report will be given by the legal due diligence person. The environmental DD. Environmental due diligence is the collections and assessment of data relating to environmental conditions or impact prior to the transaction to identify and quantify environmental related financial, legal and reputational risk. Nowadays, the environment is one of the biggest issues. For establishing any factory and production facilities in somewhere, you have to take a number of environmental clearances. And if those environmental clearances has not been taken correctly, they have been taken by misstating the facts, but tomorrow there may be certain liability on the company. It may go to that extent of closing down of the companies. That's the maximum risk, which the investor must know. The personal DD involves analysis of workforce composition, assessment of top management, analysis of economic and legal relationship with the employees, C&B system, employment agreement, review of HR records, litigations, HR policies, procedure. If you want to take over the certain company, what are the HR policies of that company, must know. What will be the future liability about the gratuity, leave encashment and all these, whether that has been properly provided in the financial statements or not. There are a lot of litigation with the employees. This has to be considered in case of while doing the personal DD, due diligence. So dear student, so that is all about these chapters. I hope you will cover it from your study module, and that's your study module cover this chapter very well, and that will be sufficient for your examination purpose. Besides that, you have a practice manual from which whatever the questions have appeared from the past, you can have an idea of how to answer those questions, and from the past papers of your Board of Studies portal, you can know that what types of questions comes and how they have to be answered.